Welcome to the 2021 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me once again on this Tuesday, November 23rd, 2021 edition. And today we're going to be talking about the continued Federal Reserve inflation that's going to be happening as President Biden has re-elected Fed Chair Jerome Powell, to lead us for another second term, another 4 years as we try to battle inflation, as well as the gas prices and general living prices that are continuing to go up into 2022. And what is that going to mean for the U.S. dollar? And the general direction of this U.S. economy. Things are getting very concerning in both U.S. households and European households and other places around the world who are facing the same thing, the same struggle in terms of housing, food, utilities, transportation, and just other resource costs. And this is not just in the major cities. This is also in the suburbs, the rural areas. Everyone's feeling the pinch amid the holiday season. The good news is we're approaching Thanksgiving. We want to thank God. We want to thank God for our blessings, life, health, strength, liberty, freedom, and many other things. And so I hope everyone has a safe and wonderful Thanksgiving, wherever you may be in the States or outside of the States. Bless your families and everything. Blessings to you and to your families as well. So we just want to give a shout out that, despite the gloom and doom that we preach on this channel of financial news, it still is a blessing to be here. And it's a blessing to have the resources to share with others as well. So let's get right into it, guys. Hey, you know what? This is what we're facing here. Biden picks Jerome Powell to lead the Fed for a second term, CNBC reports today. As you know, President Biden came on at a 2:30 conference, and he was talking not only about that, but it's about this economy. He was saying that things were looking strong. He came on, he said that, we're going to be opening up the ports. Biden focused on three things specifically: the ports opening up. He said instead of the ports running 8 hours a day, they're going to run 24 hours a day. Specifically, the two ports, Los Angeles and Long Beach ports, as well as a port over here on the East Coast at Savannah, Georgia. He said they're going to be running 24 hours a day to help with the shipping backlog that's been taking place. And he also said that they're going to be finding ways to continue to combat this inflation that he says is a problem. So Federal Reserve Chairman Jerome Powell is going to be doing more of the status quo. As you know, he's more for quantitative easing. He's more for relaxing policy. So this is going to mean more money printing. The Democrats have just passed a bill, at least through the House anyway, of the Build Back America plan, which is almost a $2 trillion plan. And this is what they're talking about, all the economists. How is that going to help us here when we already spent so much money during this pandemic last year and the year before that? So with the stimulus packages and all that, we're already over $4 trillion here spent by the Federal Reserve Bank to help stimulate this economy. We haven't gotten much bang for our buck, much ROI, return on investment here. And so Chairman Powell is going to continue to steady the ship here through 2022, ladies and gentlemen. But listen, they're going to be tapering here. The bond purchases, as you know, they're going to be reducing that by $15 billion per month, okay? And the program will likely conclude, according to the CNBC article here today, in late spring or early summer 2022. So this summer coming up, 2022, is going to be absolute madness, because not only do we have the Federal Reserve tapering, but interest rates rising. As many of you know, you've been listening to media outlets like Fox, CNBC, MSNBC, Yahoo News, Business. All of these outlets are reporting that they were going to have to raise rates because real inflation, ladies and gentlemen, is at 12 to 13%. The inflation we see on the CPC adjusted index, they're telling us, is at 6%. But we know it's double or even triple that just looking at the gas prices, the food prices. President Biden also says that today he released over 80 million barrels of oil. I know many of you seen that on TV as well, of the strategic petroleum reserves, right, to help ease the oil crisis. And he said that China, South Korea, Russia, some other countries are chipping in to help ease that. But the prices at the pump have still not gone down. Average price of gasoline, according to AAA, is still hovering around $3.35 a gallon. That's just for regular. Many of you are paying $4 or $5 a gallon for super unleaded or premium. So that's not going to go down anytime soon. As a matter of fact, Biden vows gas prices will drop before long, but not overnight. He says, this is a quote from him, as he orders the oil reserves released. It's marketwatch.com today. So this is the speech I was talking about at 2:30 p.m. Eastern time that he gave today. So he knows that these prices are going to be elevated, but not just gas prices. Food prices are going to be elevated. You all know that food plays a tremendous uh, impact on all of our budgets. So now, it feels like you go into any store. If you don't shop at Walmart, you can go, Save On, Kroger, you name it, Ingles, any store. Go in and get 4 or 5 bags and look at the price. It's almost $100 for a bag of groceries, for 3 or 4 bags of groceries now, and this is just basic stuff. So you can imagine a family of 3 or 4, you almost have to spend $200 now to get any real groceries, $250 to get any real groceries for your family, okay? Because these prices are going up overnight, and there's no end in sight. And President Biden knows this. He's hoping to hang on to the midterm elections and all of that to make it look good. He did mention one bright spot during the speech. He said unemployment is down to 4.6%, okay? But if you look at the real unemployment numbers, we're still at 10% real unemployment numbers, because some people have given up looking for work and just surviving off, 3 or 4 gig economy jobs or part-time jobs without benefits, or contract jobs that pay high, but they don't offer any health, dental, retirement, the usual type of jobs, the usual type of drill. So this is a really bad situation here, okay? We're facing a time where American savings are being eaten up by inflation. You and I savings are being eaten up by inflation. We're not getting anything on T-bonds, treasuries. The 10-year note went up to 1.6 today percent, and that's very interesting. That's telling us that this inflation is going to be longer lived than what they are anticipating, the economists are anticipating. And so what I encourage everyone to do is to continue to buy real tangible assets, okay, whether that's land, real estate, gold, silver, cryptos, whether that's also paying down your debts, because in the hyperinflation environment, you do not want to be, you want to be as liquid as possible, because liquidity is going to be what's needed to get us through when everything collapses. Right now, the dollar is strong. The dollar index is holding above $96, but that's going to start to dwindle once all of this money comes through. The Build Back Better plan, the other plan comes through. It's going to dwindle. It's going to depreciate the value of the dollar because of all this money printing, and it's going to come through the system in the next 1 to 2 years. So by the time the Democrats, by the time Joe Biden's out of office, we could be well over $40 trillion in national debt, and we could be in a literal depression. Okay, that's how serious it is. This is what we're heading towards, and many Americans know that already. Many of you know that already. But it's just seeing this in action. And the only 3 things that's holding up this market right now is the housing market, the credit market, the availability of credit, and the Federal Reserve Bank printing these massive bills up. And that's the plan. That's the game plan. Since they reelected Jerome Powell, this is what we can expect for the next 3 years.